When you're talking about responsibilities, you want to bulletproof them. Meeting a responsibility should be a source of joy. It should not be a source of stress. When we talk about financial freedom, we're really talking about saying you have the ability to spend your time as you wish. Inflation doesn't bother you in the short run.
Yeah.
It really bothers you only in the long run. Right?
Compounding inflation.
There are two sides of the same coin.
Yeah.
I'm a big champion of buying a home and funding it with a home. It's probably the biggest financial decision anybody takes in their entire life, both in terms of the size of the expenditure and the financing of it. It's the magic of compounding at work.
Welcome to Money Skills by Scripbox. I'm Jithu Gopal. I'm AVP Product at Scripbox. Today I have with me Sanjiv Singhal, who is CPO and co-founder at Scripbox. So hope you guys are going to enjoy the ride. Sanjiv, let's get into it.
Sure. Yeah.
So what's so special about responsible investing?
Yeah. So responsible investing makes it sound like ethical investing or ESG investing. It's not that. I think the way to think about this is, as a parent, you have things that you want to do for your family, right? And within that, it helps to think of some of these things that you want to do, some of these goals you want to achieve as responsibilities, right? So taking care of your parents, worrying about your children's education, their future, buying a home, your retirement, all of these are responsibilities. Other than that, there are also things like taking a vacation, right? Buying a bigger home, bigger car, right? So I think of the first set as responsibilities and the second set as improving lifestyle. I've got to make sure that my child goes to college.
Like non-negotiables of sorts.
Non-negotiable,
Yeah.
Absolutely, right? So when you're talking about responsibilities, you want to bulletproof them,
Correct.
right? And when you start talking about bulletproofing, you're talking about now reducing risk,
Right.
Risk and non-risk, right? Non-risk are more deterministic, more predictable.
Right.
They will typically tend to, what you see is what you get. If, your FD says it's going to give you 7.5%, it's going to give you 7.5% at the end of the year, right? And that's the attractiveness of that.
Right.
The downside of that is it typically never beats inflation. Right. So it'll either give you the same rate of growth as inflation or a little less.
Correct.
Right. On the flip side, there are risk investments which will promise you inflation beating returns, but it comes with unpredictability and uncertainty. Right. So when you come to investing for responsibilities, you want to get that mix of risk and non-risk right. Right. You will always have some non-risk so that you add a little more certainty to achieving your goal. But you will need to have some risk for your wealth to grow enough to beat inflation and create that corpus that will meet your goal.
Right. Just a sidebar, you did mention inflation. Maybe for those who are hearing for the first time or they don't quite understand the concept, is there like a simple definition of what inflation is?
Think about inflation is how much the value of your goals goes up over time. So college education today costs 30 lakhs. 15 years later, it's going to cost 60 lakhs.
Yeah.
Right. That's inflation.
Right.
And inflation doesn't bother you in the short run.
Yeah.
It really bothers you only in the long run. Right. Cup of coffee goes up every year from 100 to 110, 120. You don't care.
Correct.
Right. But this 30 lakhs becoming 60 lakhs is really going to bother you.
Right. And in fact, even when we do talk to customers and when these numbers come up, what is a future value of a certain goal is, there are enough jaw-dropping moments that I've seen. I've personally experienced it myself. And it's not an easy thing to get your mind around because compounding is there. And compounding inflation are like kind of...
There are two sides of the same coin.
Yeah.
And the same math that works for inflation also works for compounding. You have to win the battle over inflation by just growing a little bit faster.
Right.
So,
super. Back to responsible investing. So let's kind of do an inversion of this, like what Munger says. You get a better perspective of something when you invert it, right? What does not responsible investing sound like?
So you typically see this behavior at two ends of the life, right? So when you're young, you have no responsibilities in life, right? So you graduate, you get a job, you pay off your education loan, and all the money is yours, right? So no responsibilities, no objectives, So that investing that you do at that stage is investing without responsibility. You get to the same stage when you've achieved financial freedom, right? Which means all of your family's goals are taken care of. They are funded. You have the money in the bank or in your investments. It's going to take care of everything, right? So now suddenly if you have surplus, this investing is also now not investing for responsibilities because those are taken care of,
Correct.
right? Interestingly, I've seen two kinds of behaviors at this stage. So some people would say, okay, I won the game. I don't want to play it anymore. And all of the money goes into FDs, right? They play it very, very safe and say, look, I don't need to play the game.
Right.
Other people would say, okay, now I have the freedom
Right.
to take risk.
Correct.
And suddenly they will start investing in very, very high risk assets,
Right.
right? So both are okay,
Right.
right? Because this is the what I call the beyond essentials money, right? Your essentials are taken care of, your family's needs are taken care of, your responsibilities are taken care of,
Right.
So what you do with that money is completely your choice.
In fact, even when we do our risk profiling surveys, there is these two kind of patterns that show up. There are the customers where the risk ability and the risk willingness, they kind of diverge. For some it's high, for some it's low, and I think that kind of manifests in the choices of products that they're eventually going to invest in once their responsibilities are taken care of.
People tend to think of risk profiling only as my attitude to risk,
Right.
which is the psychological. I'm willing to take risk,
Right.
right? The ability to take risk comes from this life stage
Correct.
piece, right? Or your wealth,
Correct.
right? So if you're financially free, your ability to take risk is infinite,
Got it.
right? But when you're still investing for your responsibilities, your ability to take risk is actually low, right? And therefore you need to kind of moderate your psychological willingness
Right.
from a ability perspective.
Right. So anyway, I hope someday I get to that stage of beyond essentials. What are the quick things that I can what should I kind of prioritize?
I think a defensive start is a good start, right? You have to play defense, right? Because, as we just talked about, it gives you the ability and the foundation to take the qualified amount of risk that you need for accumulating and growing wealth, right? So, starting with an emergency fund is a must, right? Then comes insurance, right? Health and life,
Right.
right?
So emergency fund would this mean 4 to 6 months of salary is the kind of thumb rule that
4 to 6 months of salary
enough.
is adequate. It's good as long as you have good health insurance.
Good health insurance. Okay,
Yeah.
so let's kind of double click on that a bit. So I'm married. I have a son who's going to turn 6. Health insurance is a topic that I've personally thought more about, talked to friends about. I've got a company insurance. Should I get a personal insurance? Is that required? What kind of insurance should I go for? Maybe can you talk a bit more about?
So I have very strong views on this. I think relying on company health insurance only is a bad idea, right? For 3 reasons.
Okay.
Right? One is flexibility. You don't want to get locked into a job because if you leave your job, suddenly your insurance goes away. Right? Second is this low but possible risk of you having a health incident that prevents you from working. And the third is you might leave it too late. So when you end your employment at 50 or 55, right, you may not be able to buy health insurance at that time, right? So starting with the health insurance policy early, I can tell you, I took my health insurance policy when I was 28, right? And I'm 55 now. The same policies continued. We've added, we've increased coverage. We've added super top-ups on that. But that policy continues. Right?
Okay. So back to insurance. You did mention super top-up along with health insurance.
Yeah.
Can you
So super top-up is a fantastic product, right? Every insurer offers it.
Yeah.
The idea behind this is that when you have a base insurance, whether it's from your employer or your own, it covers up to a certain amount. Let's say it's a 5 lakh cover or a 10 lakh cover, right? There is a very low probability of you getting into a situation where you need more to spend more on medical treatment. A super top-up will typically start covering you from 10 lakhs or 5 lakhs, but cover you for a really large amount like 50 lakhs or a crore, right? and it is really inexpensive.
Right.
Right. So you could buy a 50 lakh super top up for a family of 3 with anything between 5 to 10,000 rupees.
Super.
Right.
Yeah.
At my age, I have a 50 lakh super top up for which I pay only 5,000 rupees. You know that you are never going to, your finances are never going to get wiped off.
And on the lines of insurance again, so I think we've covered health pretty well. So there is term insurance.
Yeah.
Can you talk a bit about that?
So term is life insurance.
Yeah.
And life insurance is about replacing your salary.
Right.
Right. If you have dependents, people who depend on your salary,
Right.
you have to have life insurance. You must.
Right.
So life insurance and term insurance is pure cover. Right. There's no investment component to it.
Right.
So that's what we recommend. You must get an adequate term life insurance that will replace your salary.
Right.
And interestingly, insurers will offer you 2 options. Either they'll pay out a lump sum or they will actually convert these payouts like into a monthly payout for you. Right. So if something were to happen to you, your family continues to, so you are not there,
Second income also.
but your salary at least is coming in.
Correct.
Right. Into the bank account.
Is there like a thumb rule of, is there like a number that to keep in mind when you're taking term insurance?
A 30x, 30 times of your salary coverage is good always. Obviously, it changes over time, right? But if you have wealth which you've accumulated, you obviously need less.
Okay.
If you have loans which you need to pay off, you need more.
Okay. So children, #1 responsibility, at least for me, is to make sure that my kid, when he kind of goes post school, he gets to a good college. So that kind of keeps occupying my mind. Like, am I saving enough for him? Should I be saving more? There's always this question of how does this education component kind of works out.
Yeah, so children is actually the number one priority for Indians.
Correct.
Multiple surveys around this, and I think it's both cultural and emotional.
Yeah.
I think our parents did this for us. We must do this, and we must do this better than our parents did this for us. When your child is 2, you have no idea what she would want to do when she's 18. Right. So the best approach for this is to create a kind of a lump sum, corpus,
Right.
Which could be used for 1, 2, or 3, education, talent, or wedding. Sometimes it's also possible to break this into 2. Education could be more definitive because you kind of say that it's going to cost me college costs X,
Correct.
and so you can plan for that. It's also got a date to it, 18. Whereas the others have a more undefined both timeline and amount, right? So it's good to think of it in terms of, okay, this is what I would be able to afford.
Right. So basically, keep a seed fund.
Keep a seed fund.
You don't know what they're going to utilize it for, but keep a seed fund, and it's got a sort of a kind of time also. I think. Along with it. So I'm just going to move on to the next responsibility in sense, and this is about buying a home. Buying a home is not a simple decision, right? It's of course there's one which is the financial part. There's an emotional and rational part, right? And it's also not just one person, especially if you're married. There is a Excel sheet conversation, there is a dinner table conversation.
Absolutely, yeah.
So it's a blend of multiple things, right? So how do you think about this particular?
So I am normally an Excel sheet guy, right? But in this particular one, I don't like Excel sheets, right? I think you need to do the Excel sheet to figure out what you can afford.
Yeah.
And I know people can prove that it is better to rent than to buy.
Yeah.
Right. There is this whole other thing about flexibility. When you buy a home, your mobility reduces in terms of employment, all of those things. I'm a big champion of buying a home and funding it with a home loan. Right. It's a big decision. It's probably the biggest financial decision anybody takes in their entire life. Right. Both in terms of the size of the expenditure and the financing of it. Right. I think it creates beyond the emotional security. I think it creates options for you. Right. So I was able to quit my job and do a startup because I knew that I would not be out on the road. I had a home fully paid for.
Right.
Right. It's just emotional. The second part is that when you do this early on, and this is part of, training yourself to get better at managing your finances.
Right.
Right. That stress which you brought upon yourself by taking a loan,
Yeah.
kind of puts that financial discipline for you. Few pieces of advice that I will add to this, unsolicited, of course, is that don't stretch yourself too much. Don't reduce your liquidity to zero. So I've seen
Right.
people kind of just liquidating all of their investments, all of the FDs, everything to do the down payment so they can reduce the amount of the loan, and they're taking the maximum loan possible.
Right.
So don't eliminate your liquidity because that could put you into a financial crisis of a different kind. And lastly, you should always have the ability to continue to do some investment,
Right.
however small, right? So you're paying an EMI, but you should not stop that investing behavior.
So this is interesting because I've heard this interesting concept, and I would want to know it's true and or this, which is because I pay an EMI, the pain of paying that interest out, right? Apart from covering the principal part, which is a minuscule amount of the total scheme of things, is always there for me, right? And I've heard this monthly SIP construct that can eventually recover in sense kind of matches up your interest that you pay.
Oh yeah,
So-
that's a very interesting one. It's the magic of compounding at work. But broadly, what it says is that if you take 10% of your EMI and start a SIP in an equity fund,
Right.
right? So you're growing your money, what you're investing at the good risk asset, which gives you some 12 to 14% return, and that 10% SIP over a 20-year. So let's say you got 40,000 rupee EMI and you're doing a 4,000 rupee SIP.
Right.
Over a 20-year period, this 4,000 rupee SIP will become some 45 lakhs approximately. And that surprisingly is exactly the amount of interest that you paid off in your home loan, right?
I think retirement retirement is a big responsibility that we have to discuss.
That's actually the responsibility to yourself.
To yourself, yes.
That's the interesting part of retirement. Everything else is for children, right? For family. Retirement is really yourself, you and your spouse, right? The parental unit.
So we hear this acronym, right? FIRE, that's there in the socials. Financial independence, retire early. And I think what's like kind of funny and not so funny about this is there is this magic number that everybody has in mind. If I ask this question, like, what does it mean to retire? Like, do you have a number in mind? It's a wide range, right? For some, it's 1 crore. I hear the 7 crore number that keeps coming up quite a lot. Once I had asked a friend, boss, what are you going to do, man? For retirement, do you have like a certain number in mind? He just looked into the distance and said, 100 crores. It took a couple of seconds for me to kind of get back to my senses. But the numbers are so vast and so different. How does one kind of unpack what is it? What is a retirement number? Is there such a number, first of all? Or?
So there is a number, but the number is for you, right? I don't think there is a generic number out there, right? Because retirement is about living a post-regular income life, post-salary life, let me call it this way, right? You don't have a salary coming in. Your expenses and your desires to travel, contribute to society, whatever you are planning, needs to be met by the income from your investments. But how much that amount is completely depends on you, right? It depends on what is important to you. It also depends on where you live, for example. Right. So a 10 lakh salary in a category B town is fantastic in India, right? But a 10 lakh salary in Bombay or Bangalore, it is tough, right? Rents are high, your cost of commuting, going out, a movie costs you 3 times as much in Bombay. FIRE usually involves very, very aggressive saving, very, very aggressive constriction of your lifestyle, and also very often a move to a cheaper place of living. Right. So if you take that into account, FIRE is possible. Early retirement is possible. Right. It depends on what is important to you. Once again, that's why it's part of this whole investing for responsibilities, because you're balancing your other responsibilities with this one, and making those decisions.
We have covered a lot. How does one do it all? It seems a bit too daunting. retirement, kids' education.
Yeah. So, and that's why investing for responsibilities is the topic, right? So, you eat an elephant in bites, right? You start small. So, as I said, the defensive start is a good start. Then you build a plan, and then you start executing against it.
Right.
Okay, sounds very simple,
Right.
You need a good advisor to kind of help you through that. But knowing that you have these responsibilities, knowing that you have to have trade-offs between these responsibilities and other desires, both of you and your family, is an important starting point. And you can actually put a plan in place. Realistically speaking, you can do both,
Right.
right? And you can do both simultaneously,
Right.
right? It's possible.
Right. Yeah. So, what's kind of saddening in some senses of the people that I've spoken to, right? There's enough to do. There are people who've just got money sitting in the savings account, right? So clearly there are some impediments for them to A, start investing, and B, think about responsibilities on. What do you think is getting in their way of sort of investing?
So what you have is a scenario where the responsibility of the decision meets complexity of the decision meets a lack of a advisor or a guide.
Right. Clarity.
And that's emerging to be a big problem in India, right? A good financial advisor is difficult to find. For a country the size of India, the number of registered investment advisors is less than 1,000.
Wow.
Right. So given that, and when you do find an investor, it can be expensive, right? So I've heard of people charging 15,000 rupees to 50,000 rupees for just a one-time financial planning exercise, right? So it becomes difficult and inaccessible for a lot of people as to where to start.
So what can Scripbox do to help people with their financial responsibilities?
So we've always built Scriptbox as like kind of a advisor in an app, right? Which is there for you 24/7, helping you think through your goals, calculating what you will need, how much you will need, when you will need, how will you invest this. You talked about risk profiling, making sure that your investment decisions match your ability to take risk, the works, right? Hand-holding you through the investment cycle, which funds to invest in, reviewing them periodically, coming back and telling you that, look, you need to exit something, all of that, right? And then we made it extremely affordable, right? So if you want to invest in direct funds, you have an option of, a very low fee of $299 a month or $499 if you're investing as a family. You also have the choice of a zero fee option if you take regular funds. So accessibility and affordability, I think both have been built into this. And I think over the last 10 years, people have seen some good outcomes.
Yes.
Right. So
I can definitely attest to that. Super. I think we have covered a pretty decent breadth. Maybe it's time to land this plane. I'm just going to summarize my takeaways, at least from what we have been discussing, right? So first, get a sense of your responsibilities, get a sense of your lifestyle goals, and overall kind of plan in place. Then, like start with get the defensive stuff out of the way, right? Emergency fund, maybe about 4 to 6 times of your salary is a good place to start. Get your health insurance covered, get a super top up done, so that you got peace of mind when it comes to any health issues that's coming your way. Get a term insurance, seems pretty cheap, 30x salary. It's a replacement for your salary, so get the defensive stuff out of the way first. Now, for me, at least, when it comes to responsibilities, kids' education is important. I have a line item for that. Retirement, duty to self, that's another line that will come in. And lifestyle goals is also important. It's not only responsibilities, but you also have to kind of look at the lifestyle goals. So maybe upgrading to a better car, maybe an international vacation once a year would be at least top of my list.
So I think the way to look at this is meeting a responsibility should be a source of joy.
Correct.
It should not be a source of stress.
That's right.
Right. And if you go about following what you've just kind of described, it can become a source of joy.
This is great. This is a good place to kind of wrap. And I think one of my favorite authors had once mentioned, clarity is kindness. So with clarity, I'm going to definitely do the financial plan. I'm going to get the clarity that I need, get that one SIP that's going to solve these issues. And yeah, so
Great. All the best.
thank you, Sanjeev, for coming by and having this awesome chat. I'm sure all the viewers would definitely appreciate at least few of the things that we have discussed. Thank you so much.
Always a pleasure.